I can figure out whether the market is going to be bullish or bearish using this simple process. The process I'm talking about is top-down analysis, and right now I want to walk you through just how easy it is to learn. Now remember, just because it's easy to learn does not mean it's easy to implement. You need to put in the work on your end to start actually studying this and putting it to practice. So let's break down how I find whether the daily candle is going to be bullish or bearish. Step number 1, reading higher time frame market structure. You might be wondering, how do we read market structure? Well, we're basically just reading trends, and we're reading swing highs and swing lows. If we look at the daily time frame, we're going to see for a long time now we've been making higher highs and higher lows, and we have been at all-time highs, which means we are more likely to continue to go to all-time highs. We can drop down to the 4-hour time frame and see the same exact type of structure. We're making a low, a higher high, a higher low, a higher high, a higher low, and so forth. So until this structure is broken to the downside, I am still expecting price to continue back up to the highs. So the next thing I'm doing is looking for higher time frame FVGs, or fair value gaps. If you look at this bullish trend on the 4-hour, you're going to notice that price is continuously bouncing from 4-hour bullish fair value gaps, which tells me that our structure is still very bullish. So as long as we do not close below this swing low down here, all of these 4-hour fair value gaps are going to be valid levels for price to bounce from. Now the last thing I'm going to do is use my fib retracement tool to find the 50% of my ranges. If you look here, I'm going to use my fib from the top to the bottom of this 4-hour range, price retraced down to the discount of that range, and then pumped. If we move this Fibonacci retracement tool up to this next range, we're going to see that we did the same exact thing. We came back down to the discount below the 50%, and then we pumped. Right now in this market, it looks like we're about to do the same exact thing. We're coming back down to the 50% before expanding back up again. That we have our daily bias locked in, we can go to the 15-minute opening range candle, chart out the high and low, and once we break that high, we can look for an actual entry model to catch the longs right here. If you go into market open without a true understanding of your daily bias, you're going to see a lot of manipulation moves, and you're going to end up losing a lot of money trying to chase the opening range.